Everyone, welcome back to Streetwise Economics. If you are new here, my name is Isaac. I trade stocks, travel, and teach smart money strategies that actually work in real life. Now, as of Friday, June 27th, I'm officially up 55.20% year to date in my trading portfolio. That's right, I started with $21,484 Canadian dollars. And today I'm sitting on $33,342.67. And that's a whooping $11,858.58 in profit. In this video, I'll walk you through how I'm trading, the strategies that I'm using, and some of the lessons that I've learned from a couple of months. Quick disclaimer, before we dive in, this is not financial advice. I'm sharing my personal experience and strategies for educational purposes only. Always do your own due diligence or speak to a licensed financial advisor before making an investment decision. Now, as a quick update, you might have noticed that I was a little quieter for the past couple of weeks. I took a short break to recharge and also handle some exciting projects behind the scenes. But I'm back and the markets haven't been sleeping. So let's catch up on everything. So the first thing is, let's share the strategy breakdown and how I am trading, particularly in 2025. My current focus is a two-pronged approach, and this has been working very well for me. I would say the first one is I do cash secured puts, and I've said it on this platform. I sell puts on high quality stocks that I would be happy to own anyway. This means I get paid to wait. If the stocks drop, I will buy it or them at a discount. If it doesn't, I'll keep the premium. Two, I have been swing trading strong fundamentals. When certain stocks pull back, I use technical analysis to time my entries and exits. But I only trade stocks that have strong fundamentals. That is solid earnings, growing revenue, and long-term upside. I like strong balance sheet, little to no debt, long-term debt in particular, and with growing free cash flows. And that's what I do before I even consider swing trading any particular stock. And I wait for it. Let's say there's negative news, for example, right? And it drops by 10-15%, and I quickly analyze and see like this is not something that is going to affect the company for the long term. Usually traders and investors tend to overreact. So that's what I've been capitalizing on. I get in and I get out. These two strategies that I shared with you, they help me to stay disciplined and avoid overtrading. Every move I have taken, there is a reason and a plan behind it. So let's quickly dive into the portfolio performance recap. In terms of the numbers, my starting capital, as I shared, was Canadian $21,484.09. And I deposited more money that was starting in January 2025. Right now, my current equity is standing at $33,342.67 Canadian dollars. That is as of June 27th, 2025, as I'm recording this. So year to date profit, like I said, is $11,858.58. I withdrew a bit of cash. I think that was 300 Canadian dollars. So now, in terms of my return on this account, it has been 55.20, easily beating the S&P 500, which is, I think, roughly now just over 3% year to date. Now, keep in mind, I'm using a conservative approach. Wherever I use the margin, I use it very carefully, maybe 10 or 20% at most of the allowable margin amount. And I don't like to take in a lot of risk using leverage. I like to do just strategic plays with defined risk reward ratios. My goal is consistent, repeatable growth, not gambling or chasing big wins. And that's what I teach in my one to one coaching sessions too. Now, I'm going to give you a quick example of some trades that I took this week. I took cash secured puts on Arch Aviation with the cash secured puts and even the shares, right? And I cashed out on that. It pulled back. It was, like trading around $10.30, and I got in, but I also averaged down. It pulled back to even about $9.93. So I was just averaging down for the shares. And for the cash secured put, when it then went up above my buying price, I cashed out. So that was it. And I cashed out this week. So that's an example of what I do. So I have a list of those stocks that I am following and monitoring, pretty much more like an analyst. And then I just, pounce if there are opportunities. Now, in terms of the key lessons that I've learned so far, here are the three key lessons that I've learned. Number one, patience pays. Waiting for the right setup is better than over trading. Sometimes there is this edge of wanting to just get in and get in. I have been able to, handle that thanks to also having a mentor, Ron Myresera, my uncle. At the end of the day, I kind of like bounce off the trades that I want to take, and he does the same. So I kind of like have years to sign off, like to say, oh, I think, let's wait. I think I would wait. So that has helped me because sometimes, there's this risk of just wanting to just jump in and end up over trading and paying some fees. Fortunately, my broker now, the fees, they are much lower, especially when you are buying shares actually. Number two, protect your downside. Using cash secured puts and technical entry points keeps my risk in check. What do I mean by that? When I do a cash secured put, let's say for example, Google right now is trading, let's say $172 a share. That means if I take a cash secured put with a strike price, let's say for like 2 weeks from now, let's say a month, and with the strike price of 165, it means today I would open the position by selling in one option contract, which is a put in that case, right, with a strike price of 165. Because I'm selling, I receive a premium, let's say $300. These are US dollars now. And what that means is that if Google doesn't hit 165 by the end of a month, which is the time frame, I would keep the $300, right, and repeat the process. But let's say Google drops to 150. I don't really mind because I want to own it anyway. So I will be assigned the 100 shares at a price of 165. So I would need 16,500 in that case, right? So that means I will buy 100 shares, but because I already got $300, that means my actual buy price would be 163. So it really reduces my downside. Again, I have to go through the fundamentals checklist, like I said, before I even consider, trading a stock. Now, the third and important thing is to track everything. I review every trade weekly, and numbers don't lie. That's why you see me sharing these insights. These are not really flash tactics, but they've been working for me, at least because I like to compare myself to the S&P 500, which is a basket of 500 companies from different sectors that are publicly listed in the US. So imagine now, if I can compound money at, right now, this is 6 months, assuming this stands 55% per year. If I had 100,000, that means that would be 50,000, right? Profit. And then if I can repeat that, that would be 50% of, in that case, 150,000, 100,000 capital plus the 50,000 in profit, right? So 75,000, right? So if I can consistently grow that, that's the power of compound interest. In this case, I want to do that in a very measured way in terms of the risk. Now, I know some of you might be watching these videos, and what can you do to support me? Please subscribe for this video to go viral, but also you can also reach out to me to book one-on-one coaching session so that I can teach you exactly how I do. I have a couple of clients that I work with, and what satisfies me is to see them succeed. Again, I always tell people that I am an educator, not a financial advisor. You must, approach this with an open mind and very much aware that trading and investing comes with risks. But how I manage my risk is what I explained, and also just focusing on things that I do. It doesn't mean that I don't lose some trades. I do, but after everything is said and done, I'm 55% up. Even people like Warren Buffett, there are trades that they lose, but the key thing is on overall, when you balance the wins and the losses on average, on the balance of probability, the success and the failures, when you do the trades, that's what is very, very important. So if you want to book one-on-one coaching session with me, go on www.streetwiseeconomics.com. I walk you through how I approach the markets and how I build my watch list and how I protect capital while aiming for growth. This year has shown me that consistency beats hype. You don't need to chase every headline. You need a system that works and the patience to stick to it. Thanks for watching. Drop a comment below if you are trading this year or if you have got some questions. I always read and respond. Until next week, stay wise, stay consistent, and I will see you in the next video, and may the markets be on your side. Thank you, and bye bye again.